Oh man, Bitcoin's exploding. We got Bitcoin running back through 28,000 with a hugely bullish hourly candle. What's going on? Why is this market moving? And what are the key levels we should be watching out for? We're going to break that down in a lot more. If you're looking to buy or trade any of these moves, ijaz.uk/telegram for our TA and alerts, plus Bybit and BitGet, links in the description as two exchanges I use. Guys, look at this hourly candle here. Powerful hourly candle. Before this, Bitcoin was just meandering along, waiting, and then this happened. I'm going to share exactly why this is pumping and what the theme of this moment is and what it means for altcoins. Guys, remember, on Tuesday, we had the JOLTS figure. The JOLTS figure was too high, came in 9.6 million new jobs openings versus 8.2 million expected. No bueno. The day after, on Wednesday, yesterday, the ADP jobs figures came in at the coolest levels since January 2021. Amazingly positive. And today, just now, we've had the US jobless claims come in, increased slightly to 207,000 for the week versus 210,000 expected. That has notched down. This is positive, and markets are taking it in the positive direction as well. So you're seeing Bitcoin work its way through the hourly resistance here, which is fantastic. That resistance was sitting at 27,900, and now we look to the next peak. The next peak sitting at 28,500. We've got to clear through that on this next move, guys. You can see a nice upward trend forming here. If I show you the 4-hourly chart as well, you can see how nicely this upward trend here is on the 4-hourly chart, riding along the EMA ribbon as well. So if you watch this playing out, you can see we're just maintaining a nice move here over the EMA ribbon, a nice bounce from it, breaking through the dotted line resistance that I had, but we've got to break above this peak. Break above this peak, create higher highs, and we can keep this move alive. Now, guys, if you're not taking advantage of this bull market, I don't know what to tell you. This market, think of it like this. This market is at a traffic light, right? It's at a very, very important traffic light, and you guys have to take the risk to decide what you want to do in this market. You may never get a better opportunity than this. You've got Bitcoin sitting here at 27.7, having fallen from 69,000. We've just finished the tightest rate hiking cycle we've seen in a very long time. Inflation has finally started to head to the downside from 9%, 10% in some countries like here in the UK. We just had the FTX collapse, one of the biggest Ponzi schemes we've ever seen. We've had Celsius, 3 Hours Capital, Voyager. We've spoken about all of this at length. And yet Bitcoin is sat here at 27.7, right? We're getting closer and closer to this Bitcoin halving next year. And things are starting to look a little bit rosier. At some point, we will have a plan of where the Fed will want to pause, and then eventually they've planned for 50 basis points of cuts next year. So they're going to start cutting. So we're sitting at this point where we know that at some point, the Fed will mess up. And when the Fed mess up, what is it they do to fix everything? They print money. That's what they do. And that's always led up Bitcoin to have its next move to the upside. And so when we zoom, hold up, do you want to trade cryptocurrency, but you're not quite sure where to start? You've got to jump into our free Telegram group, ijaz.uk/TG. We've got people in there taking some of our free signals and alerts and technical analysis and achieving some amazing results like this. So definitely check it out, ijaz.uk/TG for our free Telegram community of what it is that drives Bitcoin to have these massive bull cycles. Yes, it's the Bitcoin halving, but it's also tied to the liquidity indices. It's tied to how monetary policy is loosened and central banks start to print money. So if we take a look at Bitcoin here, these moves to the upside are primarily led when we're loosening, right? This massive bull run post the pandemic was because governments across the world in an unprecedented manner decided to print money, introduce stimulus into the economy. And it's no different here. When they hit the iceberg that is a hidden financial Titanic, governments will revert to doing what they've always done, which is what? Print money. And when they print money and they stimulate, that increases the amount of money in supply, that increases the percentage that goes into risk on assets such as tech stocks, Bitcoin, and altcoins. And we're getting closer to that. This restrictive policy where Jerome Powell and Fed officials aren't our friend is coming to an end. Their innings is coming to an end. And soon they're going to revert back to what they know how to do best, which is loosen and stimulate. And so you guys personally need to ask yourself, are you going to sit there and procrastinate? Or are you going to enter this market? Are you going to sit there and wish that you added Bitcoin at 27.7? Or are you waiting for the perfect entry at 25.3 and you're not going to buy any now? Just make yourself a bold decision and take action. The reason that 99% of people will never be successful in crypto is they're not willing to take a risk. But the reality is, up until now, you've never taken risks and you're not happy with where your life is from a financial perspective. So why would you not take that risk? Take it in a calculated manner, manage your risk, make sure you've got conviction, make sure you've done your research. But at some point, you've got to take a risk. You've got to take responsibility. Don't blame a crypto YouTuber. Don't blame CoinDesk. Don't blame some Twitter feed or some influencer. You do your research, you build conviction, and either you take a position to invest or not. It's your choice, right? It's your choice. But one thing I can show you from the data we're seeing is Bitcoin is hugely retraced, right? This was an asset that was once at 69,000 and now sitting here at 27.7. We know we are closer to a Bitcoin spot ETF. We know we've got more clarity on XRP Ripple winning versus the SEC. We know that Grayscale, who tried to convert their trust into a spot ETF, won their review appeal, and now the SEC has to review it. We know things are starting to move in a slightly better fashion. We know institutions like BlackRock and Van Eck and Fidelity are adopting Bitcoin. We know even JP Morgan are taking activity to start adding Bitcoin. And that reminds you, why did they want to flush it down? Why did they want to flush the price down when it was at 69? Was to get their bags filled. Do you think these big institutions are going to buy at 69,000 when they can buy at 15,500? This whole detour was for them. Detours are normal in the lifestyle of any asset class. You get booms and you get busts, whether it's a NASDAQ, whether it's the gold, whether it's oil, whether it's any asset class. You have boom markets and you have bust markets. And the quicker you can learn to navigate these and identify when sentiment is the market is rotating, that is when you're going to disproportionately do well in this market. Now, if we switch to the hourly chart, you start to see that this is really important as well. We're now above our EMA ribbon. We have been for the majority this week. We are starting to see the EMA ribbon flipping as well. This is really, really positive and showing that we can start bucking this trend, allow the EMA ribbon to flip and start to extend in the bullish direction as well. Now, that doesn't mean we don't have any negative catalysts. We do, and we have to be very, very cognizant about it. Remember, we're still in a rate hiking cycle. Jerome Powell could be damaging the credit markets in the US. Many banks could be trading insolvent right now. We don't know. We know earlier in the year we had Silicon Valley Bank, we had Signature Bank, we had all of these struggling. And since then, we've had more rate hikes. Do you not think that some of them are still struggling in the background? So that still continues to be a worry for me as we head into this week, which is jobs figures. So tomorrow we get the non-farm payrolls, and markets will be paying a lot of attention to that tomorrow. So make sure you're paying attention to that midday my time here in the UK, early in the morning US time. You do get those non-farm payrolls, and that's what the market will be weighing their hat on here. So nice positive day here so far. Will it last or not? Who knows? Maybe the bears will step in later in the day. But what we do need over the next day or two is really to push past 28.6, push past 28.6, and we can keep this uptrend going. If we zoom out a little bit longer, you'll start to see that the real level we need to be beating here on the weekly chart is to get above that 32k level. 32k is up here. We need to break above that. That's where we keep getting rejected from. Anything lower than that, if we even go to 29.5, 30, even a little bit of 31, it's not enough. We'll be creating a head and shoulders pattern, and that's a bearish reversal to the downside. So we have to be very, very aware of that. So there you have it, guys. There is my update on what's going on in the market. We will update you guys on what's going on with the non-farm payrolls tomorrow. So make sure you're subscribed. Make sure you're in our community. Make sure you're trading with us, ijaz.uk/TG, to get access to our Telegram group where we do some amazing trades, getting some amazing returns. I mean, take a look at this here, guys. This chap here, 80% returns here, which is really, really impressive on a signal we shared in our Telegram group. Make sure you're in there. Thanks for watching, and I'll see you in the next one.